Hello everybody, this is AK. I'm back. So on the screen you see the battleship Yamato. Yeah, Japanese battleship Yamato. And it's a tier 10 battleship in World of Warships. I rarely bring these ship out to battle because it's so expensive to service after each battle. I Some people might say I'm being calculative and being silly because it's just a game, and I don't have to be so financially prudent with in-game currency, right? Fake money. But it's very hard to undo things that I've learned, and things I've been doing in my whole life, right? So financially prudent in real life and also financially prudent in virtual life, in the games, and in another game that I'm playing, I'll tell people, oh, I'm actually a multi-millionaire in that game. Yeah. So anyway, I have to learn how to spend more money. I suppose it's good for the economy as well. And to be fair, I've become less tight-fisted with money in my retirement, right? And in yesterday's video, I actually talked about how important the CPF is to me, and how CPF members want to consider taking full advantage of the system. And I hinted that I might not want to top up my CPF once I am age 55, that I might stop topping up my CPF once I hit age 55. I talked about how much interest income I'll be able to draw from my CPF OA on a yearly basis, $20,000, and how much monthly income I'll receive from CPF Life from age 65, $3,400 a month. And that's all possible without me having to contribute any more to my CPF account, right? No more voluntary contributions, no more top-ups from age 55. And maybe I should, I was thinking of how to pamper myself a bit more. Yeah. So instead of socking away more money every year in the CPF, and this video is not just going to be about how I'm looking at the CPF, my CPF specifically, but it's also about something I said, or something that was on my thumbnail yesterday, just invest in UOB, DBS, OCBC, and don't forget our CPF, and say no to Alibaba. And by that, I didn't mean that, we should only be investing in 3 banks, and our portfolio should only be, it should not consist only DBS, OCBC, and UOB, and nothing else. That's not what I meant. It's just that I know for some people, their investment portfolio really, has only stocks of these 3 banks, and sometimes just 1 or 2 of them, and nothing else, right? And that's not necessarily a bad thing, but it's probably overly concentrated, right? Because banks are cyclical businesses. We have to remember that. So during bad times, we could see them reducing dividends, and now things look okay. But when are we going to see bad times again? I mean, they will surely come. It's a matter of when. It's not if, when. But we just don't know when it's going to happen. Right, so being overly concentrated is probably not a good idea, and So in my case, the banks form more than 40%, maybe almost 50% of my portfolio. I'm not sure exactly, but I do have other investments, and I also have a large amount of money in my CPF account, relatively large, right? So if I were to consider my CPF savings as part of my investment portfolio, then my exposure to DBS, OCBC, and UOB wouldn't be at 45%. It would be much lower, right? So I'm not being overly concentrated. I think, I hope, right? So, but the thing is, for a retiree like me or someone who's interested in investing for income, investing in our local banks is a good idea. In the run, long term, our banks have done very well, and they will continue to do well, I have no doubt. I mean, when what do you call that, digital banks were introduced, people were worried about the future of our three incumbents, DBS, OCBC, and UOB. And I said, there's nothing to worry about, right? And then this was a few years ago. And I told the reader that, I'm very confident and I'm staying invested. At that time was DBS and OCBC. I didn't have UOB yet. And the decision has turned out to be a good one. And the reader, I hope, has not been waiting to invest in the banks till today. I know there are some people who are still waiting and kept saying that the banks are overvalued over the last 2 years, that they're too expensive. And in the last dip, right, during the market panic in April, when bank prices crashed, I said in one of my videos that a reader asked me, if he should be waiting for $30 per share for DBS, because some financial influencers say, if it's not $30, don't buy. And the financial influencer has been waiting to buy DBS shares. And I told him, I've no idea what's so special about $30 per share, but the highest price I paid for DBS was $32.80 per share, and that was just before they announced the bonus issue, right? And back then, some financial influencers said that the bonus issue was just a gimmick, and that the share price would drop after the bonus issue. But I said no, $32.80 was a relatively good price for DBS, and actually we had a chance to buy more DBS shares back then, even after the announcement of the bonus issue. And people who did, I think they have been amply rewarded. There is this, there's the thing that I've said before, that remember what Warren Buffett said, that it's okay to pay a fair price for a good business. And I'll add to that by saying that there's nothing wrong with averaging up, buying more shares of a good company at a higher price, provided there is not an exorbitantly higher price, a ridiculously higher price, right? A fairly good price but a higher price is fine, right? Because that company is still growing its earnings and is still rewarding its shareholders, and dividends are increasing, that kind of stuff. It's okay to pay a higher price for a company like that. And in fact, that's what I have been doing. I mean, I started investing in DBS in 2016 when it was $13 to $14 a share. And over the years, I've been adding to my investment. And UOB as well, I first got into UOB at $19 per share during the pandemic. But I added to my investment at $26 per share later on. Right, and OCBC too, right? I mean, lowest price I paid was like $7 something per share, and in this recent market panic, I added at under $15 per share. You know, I mean, and that's almost twice as much as the lowest price that I paid, right? And DBS, of course, at 32.80 per share. That's what, more than twice the lowest price I paid, right? The thing is, as a company becomes more valuable, it's okay to pay a higher price for the company, right? So that's certainly true for DBS, OCBC, and UOB, right? So and the longer term trend is up, right? And of course, if DBS ever goes to $30 per share, I hope I'm smart enough and I hope I have the money to buy a lot more. I'm not criticizing anyone for waiting for $30 per share before buying more of DBS. I'm just saying that, you know, there's nothing magical about that $30. It's just, you know, just buy when Mr. Market goes into a depression. And if price goes lower, well, it just means that it's become even cheaper, right? And if you think that I've always bought DBS at a price that's lower than what the market trades it for later on, well, it's not always the case. You know, I got DBS first at $13 to $14 per share. Then later on I added, right? And I remember at one point I added more to my investment at like I think $24 per share. And then the market had a panic or something and the share price dipped under the $24 per share for a while, but it recovered, right? So don't be too emotional about the prices, the stock prices. You know, focus on investing in good companies that will reward us in the longer term and reward us meaningfully and fairly, at least fairly, you know, if not generously. Yeah, and we should do well enough, right? So definitely it's not about investing only in these three banks. For sure, there are other good investments out there, good investments for income. I definitely don't know everything there is to know, right? So, but, you know, for the more conservative investors, investing in DBS, OCBC, and UOB, and having a big chunk of our portfolio in these three banks, and having sizable savings in our CPF should give us peace of mind, right? At least for the more average investor like myself, I think that makes sense, right? So that's all for this video. If AK can talk to himself, so can you. Bye-bye.